By Scott Bauer, CEO of Prosper Trading Academy, and TD Ameritrade's own Alex Coffey. All right, guys, we got a market up 20. E-minis up 20. NASDAQ up right at 1%. So we're up here. We're kind of holding. Haven't given too much back, just a little bit off our highs. But what I want to do before we go further, Tom White and I put on a short gold position last week. We did it we bought 2 put verticals. And then we financed it by selling 4 call verticals for a bearish position. As you can see, we're up about $1,300. So what we're gonna do, $1,300 in a couple days here, we're gonna manage this trade a little bit, and we're gonna sell out one of our long puts that we've made about $400 on, create closing order, take that down to 1, and we're gonna sell out one of our long put verticals. Now, we still have a position on. We still have, now it's 1 by 4, right? So now we've made an adjustment. We've taken some of our profits, about $400 of our profits on this trade. Why? Because we're not in the storage business. You know what? Gold could rally up and we can reestablish some of this position, but we're moving. We're taking in some of our profits. That's what we're doing. All right, guys, let's get to the rest of our trades here. So the first one I want to talk about is, let's go Home Depot. We've covered that a lot on the show and during the last couple weeks. So Home Depot is a stock that, remember, sold off violently at the end of the year with its counterpart Lowe's, and now it's made a pretty massive recovery back here down to up around the 192 level. It's got an expected move, about 2.5%, not massive, 2.75%, something around there. Not a big move, but it's still, in terms of dollars, it's a nice move. What are you guys seeing in a stock that's really, like Ben Watson did? If you discount that last meltdown here, this is a nice little sell-off and recovery. That's what Ben's chart did. It kind of took this last, bottoming out trade there and kind of discounted it. And, it looks like it's made a nice recovery here, but it's above some of the numbers. What does Home Depot have to do? Because in terms of do-it-yourself retail and home improvement retail, they're the leader. Lowe's, they're clearly the market leader over Lowe's.
So I look at this, and I'm looking at this 2 different ways.
Yep.
Fundamentally, I love the stock.
Yes.
And I love the economics behind it. Economics meaning that new home sales still are just, so horrendous. People are redoing their homes. They're remodeling.
That's
they're
the
putting
point
money
I
into
was
their
going
homes.
with. Right.
So a stock like
can't afford to move.
Exactly.
Can't afford a new house. Let's fix up the one we have.
Bingo. So from the fundamental side, I love it. Now there's something blaring to me technically here, and I don't know if you guys have ever touched on this before, something called the 50% retracement indicator.
I've heard the term.
Can I touch on that?
Sure, of course.
So what you do
Take us somewhere we've never been.
Beautiful. And it's one of those Fibonacci type of indicators, but it's very, very strong. You look at the recent high and the recent low, and you can do it over any time period. Okay, so you look at that 215 high, the 158 low. Okay, so if I'm doing my math right, it's about $67 top to bottom.
Right on the nose.
Okay, so half of that is roughly $34, right?
34 bucks.
Well, look where we're sitting right now.
Right.
Where are we right off of the bottom there?
Almost right on $34. And is that why this stock may have stalled right here?
Yes, absolutely. And so that is a pivot point in the stock right now. Now, the people that follow this indicator, to the letter of the law would say, okay, it's going to retrace down a little bit from there. Doesn't mean it's coming all the way back down to 158, but it means that you've seen that stall here and the stock is getting tired. So that, from a technical side, would lend me to possibly put a short position on. But then I look at the fundamental side and I say, things are just setting up ripe for a stock like Home Depot. So what does that tell me? Well, it tells me that maybe directionally I'm not biased in either direction. So coming into earnings here, Alex, you mentioned an iron condor earlier. That's probably the first thing I'd look at here.
So I looked at it, and it's only like 33% IV percentile was the only thing that kind of made me a little bit skittish on that. But if I'm going off kind of what Scott says and we're following that logic, we kind of look at maybe potentially a short-term pullback, but we like the stock on a longer term. This is maybe something too where if you did have to pick a direction, maybe you sell a put vertical or something, or just a cash secured put, although it's a little bit higher price stock, to maybe try to establish a longer term position at a lower price if that logic turns out to be the case.
February 14th, it looks like, Scott, it went through its 200-day moving average and has stayed above it ever since. Now, do you look at that in any of your analysis of this? I mean, that's only $2 low, and with a move about $4.50. So it brings that into play, doesn't it?
It does. And what would have made me feel better is if it actually retested back to the 200, held, and bounced again. So the fact that it's up there right now, I don't put a lot of bias to that, to the upside. And it's earnings, right? It's earnings, so really anything can happen. But I do like looking at 50.
And here's something else to think about to back up your point. This stock has consolidated in a pretty strong market.
Yes.
Several days up here in a row, and this stock hasn't moved, right? It got up to this level, and really he's had trouble going since the 14th.
Yeah, and I think that just says that it's a little bit tired right now. Again, I'm not calling for it to go down 10%, 20%.
If they blow away earnings, guess what? Stock's probably going to go a little higher.
Which to me, if an iron condor sets up to the reward to risk that I would want, that's the type of position I'd be looking at.
All right, Alex, the percentages on an expected move, we've seen bigger, that's for sure. And this stock has come a long way down and moved a long way back up. So a $4.50 move isn't that big.
No.
For the price of the stock you're looking at here.
It isn't, but yeah, it's right in the middle of the range. You know, the technical side saying one thing, the fundamental saying the other thing. You got earnings. I think to me this says, yeah, more of a neutral strategy. And if you do find the right risk reward, maybe you just do it a little bit smaller than your normal size if you're not super confident in the trade in general.
Alex, I love that. That's a great idea, right? If you want to do something but you're not 100%, have that conviction behind it, do a little bit smaller, right? There's always going to be another trade to make.
Exactly right. Remember, you go through the progression of doing your little tests and running through the we can do it live on the air right now. If it's about a $4.50 move, that takes us down to about, let's say, 187. I'm sorry, 187. So if we go a little further than that, maybe to 185, we go to the 182.5. Okay, there's 36 cents. Remember, we've gone to the 80 percentile here. If we do that on the same side, 4.5 is basically
200,
196.
Right.
So we'll go to 197.5, 200. I think that's what you just said, Scott.
Yeah,
I should
like
listen
that.
more. So there you see a $2.50 wide iron condor, 75 cents. It's about a third of the price.
Right.
That's in the range of something that's healthy enough to do.
For this type of move, which is an outsized move.
Right. And by the way, we gave ourselves extra room.
Exactly. I think if you tighten that up and actually went to the strikes where the expected move is, you're probably going to get closer to about $1.20, $1.25, closer to that 1-to-1 reward to risk. That's probably would for me be more in my liking.
So you'd stay a little more aggressive on this, not go one move outside.
If I could get close to that 1-to-1, meaning $1.25 on a 250 wide iron condor.
Let's take a look. Yeah. Let's go down to 195. Or
another thing
195, 197 half.
Another thing to kind of point out with what Scott's saying too, this is again just kind of an overnight play as well.
Exactly.
Yes. So and then on the upside it'd be 187.5.
85.
185.
I don't want to give this away.
127, right in the middle.
Bingo. So if I could do that, and again, I look at the technicals, I look at the fundamentals, and that's in my wheelhouse.
Well, and another thing to point out as well is if you look at this, although we said it was about 187, 196, if you add in the credit you receive, you are still past that expected move.
Right. All right. I like it. Let's send that off. We'll do that 3 times. All right, guys, the last one, AutoZone. Now, AutoZone is one of these names that it trades a pretty high price. So we can't, this is not one that we want to trade the stock on. So this brings options into play even more, right? This stock has had quite a run, as you can see. Do-it-yourself, fixing up your own car, has had, that whole sector has had an incredible run along the way here. And look at this, not a big sell-off at the end of the year, very small in comparison to the rest of the market. And we've recovered past those highs before, which a lot of the other stocks haven't done. So what do you guys see in AutoZone? This is one that you're going to have to make a call on. 57, a little higher IV percentile. And this is a name that Looking at, like I said, you got to be cognizant of the dollar level here. $42 expected move, 41.90. So that's about almost probably 4.5%.
Yeah, exactly.
Right around there.
Alex, you suggested something earlier when we were talking about stock replacement, especially for, you know, in a more expensive stock or younger traders. That may be the appropriate thing here.
Yeah, depending on what your conviction is on a direction on
Right.
this one, you know, it's right towards the high. Depending on what you see, this kind of a company does tend to perform better than the rest of the market
Yeah.
in a downturn, just because of the rotation into kind of do it
Down
yourself.
$14 today, too. So if it's something bullish, you're
look at
getting it at
this.
a nice price.
You know, it is an expensive stock. The option chain isn't the most liquid out
Right.
of all the different choices. I'm definitely, if I'm going to do something in this one, it's going to be smaller as far as contract sizes. Maybe a downside put.
Yeah,
vertical
look,
or
yeah, look at
downside,
the. I mean, you're
put
talking
calendar.
about some pretty chunky premiums
Yeah.
in some of these strikes. $23 for an at the money. I mean, those don't come cheap.
No, but then again, much to Alex's point, that kind of dictates or tells us the fact that it's not so liquid, not a lot of open interest. And, you know, again, you're looking at a $900 stock with a 40-some-odd dollar expected move. You know, that's why the straddle's priced
How about
like that.
something like this? We've got to keep this low price because how about if we go 940 calendar? 220 on a 940 calendar. Not cheap, but I mean,
right at that
that's
expected
$40 higher. Right. What if you go 930 on a calendar?
Probably not
Something
that
like
much
that.
more
265, you
expensive.
paid about a half a dollar more. So you know what? Because this is big, because of what it is, we'll do this very small. We'll put it in 2 times. Costs us about a little over $500, $530. All right, guys. Final thoughts as we turn this in. We did a little more teaching today than we normally do, but I think I kind of like it. Scott Bauer, final thoughts on this market.
Final thoughts is really understand volatility. Kevin, you mentioned earlier in the show that volatility is mean reverting,
right?
Meaning when it's higher, it's coming down. When it's lower, it's coming up. This is a time you maybe want to look at it when it's a little bit, you know, down in the further than it should be.
Alex Coffey, 30 seconds.
28.15 seems to be a pivotal point. So let's see
Nice.
where we go from here.
He put a number on it. All right, I want to thank Scott Bauer and Alex Coffey for joining us today. That does it today for Fast Market. Please tune in tomorrow, 10 a.m. Central, right here on the TD Ameritrade Network for another edition of Fast Market. Have a great day, everybody.